All right, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get it to it this week. So we had a little bit of an eventful week this week. All in all, though, markets ending sideways. You're going to see we essentially stayed inside of this tight wedge here. So this range has been tightening very much. As you can see, we've kind of hammered on this downside trend line here a couple of times, and look where they closed it on Friday. I mean, you got to zoom in. You know, technically, yeah, it is slightly below that. I'm just going to call it right on. I mean, there's a margin of error here. You know, I could move the line down an inch or so, and it would still be kind of in that vicinity. But we're right tight. And speaking of, we hit the top side of that trend line on Friday as well, and we had a pretty good reversal. But we get into some headlines first. So if we go and take a look here, you're going to see that a lot of insider selling and a lot of outflows from technology. In fact, the largest outflow on record here, at least going back to 2017, I'm not sure how much farther back this goes, was last week. So pretty good downtick there. But you're also going to see Mark Zuckerberg. Is he running for office? Let's take a look here. There's about 2 or 3 more pages of this alone. And I think I counted about 37 sales or conversions from him, just Mark Zuckerberg. So lots of insider selling going on. We talked about that a few weeks ago. There was some insider sells on NVIDIA, SMCI, and NVIDIA had a pretty good reversal on Friday, which of course we will talk about. But some other headlines going on in the week. Powell spoke in front of Congress. One of that big snippets here was that he said that they are working on a package of liquidity measures which directly addresses the problems faced by Silicon Valley Bank and others like it. So the Fed is aware that BTFP is, and reverse repo is about to unwind, and it looks like they are going to be prepared with, like you said, liquidity measures. Does that mean QE? Right? So there's a lot of people out there that have screamed from the top of the hills that BTFP is not QE. And, I'm not a banking expert, but I do know that the day that they announced BTFP, the market stopped selling off. And I would say, I don't know, you guys tell me, does this look like a liquid market or an illiquid market? I don't know. It looks plenty liquid to me. And, okay, even if BTFP and RRP are running out, they're already talking about, and I mean, Powell just said it, you can read it right there, liquidity, right? So are they going to start ramping it up again? We'll see. He also said, I don't have the snippet here, but he also said that they are not looking for inflation to go back to 2% to start cutting. So they've admitted that. Additionally, one last little headline here is, and this will kind of take us into the Friday price action, but January payrolls revised down 124K, even though we had a slight miss, or excuse me, a good number. Right there's payrolls 275 with 200 expected. So the market is finally, if we take a look at the price action here, you're going to see we gapped higher on the week, or on the jobs number, and we started to sell off intraday. And we actually closed near the lows of the day. And it's almost as if the market is now starting to realize, hey, these jobs numbers are continually getting revised down. And that's pointing possibly to a weaker economy. We can talk about gold, which we will. I believe that is potentially sniffing out some type of a slowdown or more of a slowdown here. But again, lots of headlines going on this week. Next week, we do have a quarterly OPEX. So going to be very important. A lot of premium expiring. These kind of OPEXs, these heavy, the quarterlies can be known as turning points. There's lots of signs here pointing to market may be getting a little stretched, a little exhausted, and really the last sector to go in a bull run is going to be the strongest one, and that is the semis, of course. NVIDIA here, take a look at that giant gap in crap. That's an engulfing candle wiping out the last 2 days. Heavy, big time volume behind that. If we go to the SMH, you're going to see here, same thing, which NVIDIA makes up about 25% of the SMH at this point. But take a look at the volume there, and we can go to a weekly. You got to go back to, really when we were just hemorrhaging in 2022. This actually beat the October lows. So we've had the highest volume, even the October lows there, weekly volume was higher on the SMH, and we finished with a pretty steep tail candle on the weekly. So possibly pointing to some signs of correction. I'm seeing some insider selling. Markets look tired. Again, that said, there's no real technical damage at this point. I'd still like to see, for the bears to really get something going, I'd like to see a daily lower low. So that would be, we'll take out 50, 60. That's kind of been my level. We'll call it 50-50 at even. But basically these lows here, we've hammered on it multiple times over the last 2 weeks. We have bid off it and made new highs. But if that level gets hit again, I don't think it holds up. And I do think that could start a corrective process. However, while the trend is still up and while those supports are holding, you have to give by the dippers the upside bias. So technically speaking, no damage, but we are seeing some warning signs. And again, the semis, they are the generals, right? They have been leading this market. And if they start to roll over, it's going to take everything down with it. Now, here's the positive. I am seeing some rotation here. If we take a look at the IWM, this finished down 13 cents on Friday, whereas the spiders finished down $3. That's a decline of 60 basis points. Q's down 643, a decline of 1.5. And the Dow was down just 12 basis points. But the IWM over the last week or so has been outperforming. We've also seen money flow into some other sectors like biotech, even some growth stocks like ARK. That was up 1% on Friday, while the market was down heavily. The semis were down heavily. I'm also seeing a little bit of signs of rotation even into transports. This weekly pattern here is not terrible. I do like that setup there. So again, if the semis roll over, it's going to take everything with it, even if there is rotation. But what that does point to is that at some point we might want to look for weekly higher lows. As long as that rotation continues as the market is correcting, that's not anything unhealthy or anything that we would not want to see for the market to eventually carve out a nice recovery. Again, none of this means anything until we take out support. And the big level I'm watching is right around here. These lows from the last couple of weeks, we take that out and then put in a lower high. We are in corrective mode. But until then, still give by the dip the bias as they can take this higher. Next level, psychological level, will be 5,200. I've got a little bit of a level above that around 52.15. So that's what I'm looking at on the SPX cash. The Qs did close outside of this trend line for the fourth time in the last 3 or 4 weeks. So the Qs are showing cracks, right? We've talked about this. Apple, much weaker. Mag 7, it's now like the Mag 4, right? Google's been much weaker lately. If this market loses NVIDIA, it's going to go down pretty quickly here. So tech, definitely a little bit more vulnerable. The diamond here, this already has lower lows and lower highs on the daily, so be aware of that. So the Dow showing a little bit of weakness as well. We talked about the SMH outside move, pretty ugly weekly chart. Cloud software, lower highs now. If this pivot gets taken out on a weekly close, that is 81.27. This is going to be in corrective mode. So IGV now has a lower high. So again, lots of tech starting to weaken, and we're seeing leadership thin out at the top. Dow transports, again, lower highs here, but I don't have a problem with the weekly. I do like that green bar. We're inside of that. This can just hold up and then go higher when it's ready. So I think the transports could be a sector that could play catch up. Again, if the whole market comes down, it's going to put everything under pressure, but this is an area that I think could be a runner if the market does recover in the not too distant future. All right, so let's get over to rates really quickly. So even despite some of the dovish kind of remarks here, the 2-year actually held up okay. Held that 50 moving average. Yes, we did back off this week. We're still above this green candle low. So on the short end, things, the yields held up a little bit better. Fives came back down and essentially tested 4%. The 10-year, again, just ticking above the 4%. It got to 4.038. And the 30-year went right into this trend line. We talked about this last week. If we backed off, this is where we would expect it to bounce, and it has. Now the question is, does it come back up to the highs and push towards 4.8? Or do we start to snap down and go back down to the lows? I'm in the camp that the long end stays mostly elevated. But I think the charts are reflecting that right now. But we'll see in the near future. It does look like the market is sniffing out a little bit of economic weakness. And that doesn't mean that that doesn't mean inflation has to come down. This could just be a stagflation environment, which I don't want to get too much into because I could make this video an hour long. But in any case, rates pulling back here. bottom line though, that long end is getting a bid at that trend line low. XHB finally had a down day on Friday. It also had a engulfing candle. Would prefer to see higher volume to be, trying to call any sort of top, but it did come in off the highs. Weekly, again, it's a little stretched here. It's probably due for some backing and filling at the very least. VNQ continues to be a sector that has been surprisingly strong. I think a lot of this stuff with REITs, at least for some of these equities, is somewhat priced in. And I think additionally, this is rallying here because a lot of shorts were in this for good reason. And once the market bottomed, this was a squeeze sector, and it's been holding up really well. You're also seeing, like I said earlier, the Fed is not, they act stupid sometimes, but they're not ignorant to commercial real estate. They know what's going on. And I think that they are, this is just my opinion, I think they are prepared to act if something happens. So I'm not thinking I would want to fade commercial real estate here. And pattern-wise, this is pretty good on VNQ. And again, this is another sector that I'm seeing money rotation to. So it could be a sector that once tech is done correcting, if and when that happens, this could pick up the mantle amongst those other names, IWM, growth stocks, stuff like that I mentioned earlier. XLF here still holding up okay. Didn't quite get to that 41 handle like we talked about, but it still can. Weekly chart is still pretty stretched though. So just be aware of that. Additionally, on Friday, KRE held up okay. It was up 4 cents in a down tape. Again, lots of shorts in regional banks too. If this gets any good news, it can squeeze up. I don't really love the chart. I don't like that we closed below that weekly green bar there, and you're now setting up a bearish inside bar on the weekly. So there could be some downside. Powell has admitted that there will be more bank failures. That will likely take the KRE down, but I don't think it's going to cause a massive earthquake, right? The Fed knows about it. Jamie Dimon is just waiting to scoop up all those assets. So that could put pressure on the KRE, but I don't think it's something that's going to collapse the market. KBE holding up much better than the KRE. It was down 2 cents on Friday, but this is in a much better technical position on the weekly. XBD here continues to make new all-time highs. It is a little stretched though. All right, so getting into commodities here, oil holding up okay. So it did not break out like it threatened to late last week and even sometimes this week. I think it can with one more week of consolidation. So I think if this holds up and just stays sideways for the rest of this week, it can go higher after next week. That's just kind of how I've got this mapped out. I just don't want to, if it pulls back, I just don't want to see it break this trend line. But right now it's been in a tight range and it's holding up. What I do like, and I've been saying this repeatedly, is even as oil has not broken out, XLE has. We finally got that close above that breakdown bar, and we're now starting to inch back up and grind higher. Same thing with XOP, higher highs now, and OIH here breaking out of this trend line, little consolidation, and this has moved up nicely, closing above the 100 moving average for the first time since November. So what does that mean? It means the producers, it's risk on for the producers, which means that even as oil isn't breaking out, investors are willing to take on risk in the sector, which could point to higher oil prices. So producers acting well, crude's in a range. If it holds up, I think it can break out after next week. Uranium all over the map. Take a look at CCJ. So I talked about this, and it's the reason why I pay so much attention to these big wide range candles. When you close below them, that's a sign that institutions are bailing on that breakout. And what you'd expect is a lower high at some point. I told you guys 45 would be a retrace area for CCJ. Didn't quite get there, got to 44, 47. We had an engulfing candle on Friday. So I think CCJ is in corrective mode. I would look at it at maybe 37.50 for a bounce. And that's all that is. I've already seen a lot of questions about, should we be getting back into uranium or get back into uranium? It just started to correct, guys. Like the last time that this went through a consolidation, it lasted about 18 months. So it might take some time. I mean, you got to look what you did on the monthly here. You went parabolic. You went straight up. It's not going to just pull back for a week and then go up to all-time highs. Like it's going to, I'm not saying it can't, but this could take a while. Look at where that monthly 20 MA is. It could take a while to catch up. could take the rest of the year for these moving averages to start to catch up. So it may need to do some healthy digestion. There's no need to FOMO back in already. But this is in backing off mode. I will say, again, like I have mentioned multiple times, URNM has not negated that weekly green bar via the close. Neither has URNJ. So we are seeing rotation out of the majors and into the juniors and some of the smaller names. That's bullish for the sector overall. That means when this consolidation is over with, it's likely going to have another leg higher. So a little bit of weakness here on Friday in the uranium market, but overall, I think the structure is bullish. Nat gas here continued to bounce this week, but came back in Thursday. So kind of rejecting that 2 handle. If this can put in a higher low, it can work its way back up into the 225, 230 range, maybe even 250. If this loses that 20 MA though, this could potentially make new lows. A lot of the producers now are finally walking back, production. I think EQT was, infamously, having, I think they had 200% increase in rigs, even though price was, at $2 or lower. I think they finally came to their senses. They started cutting back. I know Chesapeake made comments a week or two ago. But that's kind of stuff that will take time as rig counts decline. It's not going to affect spot or the front contract here in the near term. But later in the year, that could be bullish for the price. Anyway, dollar index, that did come under pressure. So I've been telling you guys 103.50, right? So if that breaks, I don't like the dollar. It's in a weaker technical position. It did get a nice bounce, though, on Friday, 102.50. That was the next level I had. You can see this trend line going all the way back here. There is plenty of room for a weekly high or low on the DXY. So that is your positive. If it can do that, it can work its way back up. But short-term resistance is right around 104. 103.50 to 104. If we get a lower high here and this breaks, that's going to be problematic for the dollar, and perhaps the market is sniffing that out, some economic weakness moving forward. It's now as if the market is finally acknowledging that, hey, even if we get a strong jobs number, it's going to just get revised down. Gold is also sniffing this out. This is on breakout. This is an impulsive move. Heavy volume. You had 1, 2, 3 levels of resistance on the daily chart, and gold smashed through all of them while making a higher high and a higher closing high for 9 consecutive days. That is an impulsive breakout. So I think this move has legs to it. Thinking about doing a little bit more of a deep dive extended video on gold and precious metals here maybe in the next week or so. So stay tuned for that. But right now in the short run, gold is holding up, and this can go to 2275 area. Not saying it goes there in a straight line, but that's kind of the next level that I've got penciled in for that. It might need to pull back a little bit or consolidate. It is an OPEX week. It's a quarterly OPEX. So just take that for what it's worth. But I think this move does have legs to it. For the miners, I think you can buy these on dips. So that is what I would do there. Silver, I think, is, again, kind of indicating that we're seeing a little bit of economic weakness, right? Silver's not really close to breaking out. I mean, you're into this trend line here, but you're nowhere near new highs, right? So I think the industrial component is kind of keeping a lid on that. I think eventually the monetary aspect will far outweigh that, and there's way more upside in silver, I think, than gold percentage-wise. But right now it's under a little bit of pressure. I still think you can buy this and miners on dips, though. Same thing can be said for platinum and palladium. You guys know I've been on this train for a while. I do like them here at these prices, and palladium had a nice breakout this week, looking for that to go back to 1150 in the short run. Now, copper, conversely, a little bit of an opposite indicator. But like I said, I think that even in a recession, we can have elevated inflation. We've seen that before in the 70s. It's called stagflation. So copper, conversely, breaking out, essentially doing the opposite of what silver's done. Of this little trend line here, we did back off of it on Friday, but it is holding up here. If this dips back below, again, 375 is your short-term level. There's a little pivot here at about 398, and then $4 are your short-term areas on HG. All right, Bitcoin still holding up, made new all-time highs at 70K. This does not look like it's done. This may have a local top in place. I wouldn't rule that out, but this move to me does not look like it's done yet. You're going to see here on the weekly, this is still, it's going to have the highest weekly closing high of all time. So, yeah, big tail candle here on the weekly, wide range, could potentially signal a little bit of exhaustion. Like, again, it might be a local high, but I don't think this move is quite done just yet, unless I see, some type of reversal and follow through, right? Dips are still being bought. We sold off 70K, essentially 69, 70K down to 57 in an hour, and the dip was viciously bought. You might say, well, the outflows of Grayscale offset the inflows. No, that's absolutely completely false. If you actually look the data up, the outflows of Grayscale over the last month or so since the ETF was live is about $9.5 billion. The inflows into IBIT alone are about $9 billion, and then there's about 7 or 8 other Bitcoin ETFs that all have 5-6 billion in inflows. So the inflows are just driving this higher right now. Additionally, what I also like is that when Bitcoin does sell or there's weakness, Ether is still holding up. You even have Doge pushing higher. You've got some of these alts acting well. Solana breaking out, Cardano breaking out. So you're seeing rotation, and I think the sector is just sniffing liquidity right now. And I think the Fed has telegraphed that. I think gold is telling us that. Is this something that is healthy long term? Absolutely not, especially with higher floors and inflation. But that is what I see right now. And again, I don't see any problems in the crypto market. So anyways, again, markets here. Bottom line, still give buy the dippers a bias till we break support. But it is definitely looking like market is getting tired. This could be a little bit of a warning shot here with NVIDIA, SMH, look at AMD, look at that tail candle, Broadcom. So semis, look at that lower low now for the first time in a long time on Broadcom, right? They recently had earnings too. So again, watch those semis. If they start to slip, I think that's going to be the leading indicator for a potential correction here in this market. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I will talk to you guys all next week.